Ladies and gentlemen, welcome back to the channel. We have a lot of news to get into today. Some pretty wild headlines from Trump, even threatening 100% additional tariffs on China, UAE, Brazil, India, countries that do business buying Russian oil. Now, it's not as bad as it sounds, and I'll explain why that is. We'll go over all of your news today. There's like a ton of things to get into in the markets. There's a risk on appetite, but there's definitely a pushback that is starting to form. You can see the VIX is up today. The IWM is up today. Russell, your NASDAQ, your risk on areas as well. So we have a lot to get into. Tomorrow is the big day. Tomorrow is CPI, the start of maybe more fears about inflation from tariffs, or, well, if inflation is high, it's more of a kick the can down the road. And we'll see what happens in the next coming months when it comes to CPI. So ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. First things first, I do want to just shout out the trading community link down below in the description of this video. You will not find another service anywhere that is like the one in the description of this video, because what we are doing over there is going out and finding these small cap opportunities. There's a saying I like to say that 97% of small caps are terrible companies, but 100% of great companies were once small caps. We're finding the opportunities within small caps, the companies that I believe can grow into huge companies in the future, 10, 20, 30, 40, 50x kind of opportunities, $5,000 into $500,000. Those are the kind of opportunities that we are looking for. Most companies are terrible, but some of them, it's shocking that they are at the levels in which they are at. Specifically, AI, energy, biopharma, those are main themes that I'm focusing on right now. Crypto as well. So come join the over now 50 members in that trading community. Great members, very intelligent members, as Trump would say, if I can do a little analog to Trump, try to talk like Trump here. Nonetheless, ladies and gentlemen, check it out. Link down below in the description of this video. And let's get started. Now, in the news today, Donald Trump is really I don't know, he's having a good morning. He's saying a lot of crazy stuff. Trump, here's one. He says, the market has become calm and nice because of U.S. Treasury Secretary Bessent. I go on TV and rile the market. He gets a muse out of this, but he's not trying to destroy the markets. He's not trying to destroy the economy. That's kind of what I get out of this, that like Bessent is the logical one, and Trump just has fun and goes on TV and says shit that stirs up the markets, but he's not really doing it to cause any damage. Trump on rates says we should be less than 1%. Trump says that interest rates are way too high, that each point cost the U.S. $360 billion. Trump says we have barely begun with tariffs, only on cars and steel. Trump says U.S. Treasury Secretary Bessent is doing a fantastic job. Bessent is also seen as someone that could become the new Fed chair. So, I'm paying attention to what Trump says about Bessent. Trump on tariffs says we're still willing to talk. Again, as we've said before, these letters are a negotiations tactic. It's not the end all be all. We're done with negotiations. It's, hey, countries, let's negotiate. We don't want to take 7 years to iron out trade deals. We want to take 7 days or 7 weeks, not an extended period of time. It's about putting pressure on countries to actually negotiate something. Now, this was big news today, and I think this is actually why the VIX is up quite a bit. Trump threatens 100% tariffs on Russian export buyers of oil unless Ukraine peace deal is reached by September. So this would be like India, China, some of our biggest trading partners that buy Russian oil. Now, again, I think this is a pressure tactic, not something that Trump actually wants to implement. I think Trump operates like he wants to put the most amount of pressure on countries to get results without destroying the economy. Like, come on. China has a 55% total tariff on them right now. If they were to get a 100% tariff added onto that, like, you're back to trade China embargo. You're back to depression risks. Trump knows this, okay? It's all about just getting something done. And while this does create uncertainty for markets, you gotta like see through it. You gotta try to understand what Trump is doing here. And when you do, I'm sure Trump doesn't want a depression. I'm sure Trump doesn't want to destroy the economy, okay? Because that's what would happen. So it's like, you really got to logically think, does Trump want his legacy to be one of depression, or does Trump just want to get deals done, want to get peace? I think it's the latter, okay? So under that philosophy, I have to stay steadfast invested in this market while also acknowledging that Trump can be willing to take it right to the edge when he doesn't get what he wants. We've seen that. There was a 145% tariff on China for like 2 weeks. I mean, he took it right to the edge of financial catastrophe. Okay? Which is a good thing. He didn't take it further. Okay, you can, say taco all you want, but it's a good thing that Trump did not cause a depression, I would say. Okay, now I think some of these comments about, again, adding additional 100% tariffs really has to do with China, right? Because China is a buyer of Russian oil, and that would be where the real economic pain comes in. Now, I think that's why the VIX is up today. The VIX is up 3.29%. Again, because of that threat. Now, September, quite a ways away. The VIX really measures volatility over the next 30 days. So the VIX is up 3.29% today. I find that notable because the Russell, a risk-on index, is up 0.5%. The NASDAQ, another risk-on index, is up close to 0.5%. Well, the S&P and the Dow are lagging. So investors today, they still want to be in risk-on areas, but they do want to start maybe getting a little bit of protection, right? Well, protection is on the cheaper side. That makes sense from a, strategic perspective if you are a hedge fund or institution. Okay. So I'm not surprised you're seeing the VIX up today. And I think it really has to do with those Trump comments around 100% tariff on China, India, right? But it's really just a ploy to get those countries to pressure Putin to stop. And Trump also says today that a NATO deal is fully approved and fully done after meeting with Secretary General, weapons to be delivered immediately to war zones. These are Patriot missile systems and other munitions. Now, the ECB is to discuss a more negative scenario next week than envisioned in June after Trump's latest tariff threat. Also in the news today, according to the Washington Post, White House senior advisor Hassett is rising in the race for the next Fed chief. Trump says we're doing so well, we blow through interest rates. Trump says that Powell doesn't know what he's doing. Trump says the tariffs are kicking in, the economy is strong. Now that's an important statement because tomorrow we have our CPI report, okay? This is the first CPI report that is expected to show tariff inflation, okay? Fed officials believe so, certain individuals on Wall Street believe so, and in theory, right, tariffs create a one-time price increase. Like, it's not the end of the world if we do see inflation in tomorrow's inflation report. Again, even more so because we've been at a low place of inflation. We haven't seen inflation. So it's not the end of the world if we see that one-time price increase. The issue would be is if we start to get a couple inflation reports that come in on the higher side. That's where Wall Street would get, more nervous. But I just don't see that. A lot of companies are not raising prices. They don't want to lose market share to other companies that don't need to raise prices, that can keep prices low. So I think this competitive nature of capitalism mixed with a consumer that is not doing well, that is not strong, there's not a slush fund of money out there in everyone's bank accounts, is really going to keep the lid on inflation. And honestly, I don't think we're going to see an inflation problem. And that's one reason why I'm really bullish on this market. But tomorrow is a big day. If we don't get inflation, that's great. I think stocks are going to rip higher on that. If we do get inflation, again, it's not the end of the world. It's going to be the mentality of we're going to kick the can down the road and let's see what next month's inflation report comes in as. So I do think the risk is skewed towards a positive reaction tomorrow. But hey, I've been surprised before. Trump says, I think we will get a deal with Putin done. But he says that Putin's fooled a lot of people. Trump says, I don't want to call Putin an assassin, but he's a tough guy. And here is the official headline. It says, White House official, quote, Trump means he will impose 100% tariffs on Russia, secondary sanctions on other countries that buy oil from Russia if a deal isn't struck in 50 days. That's China, India, Turkey, UAE, Brazil, etc. Trump says, I spoke with Germany and most of the larger countries on tariffs. Trump says, I spoke with Germany and they are really enthusiastic. Trump on tariffs says he is always open to talking, including with Europe. Trump says having a strong Europe is a very good thing. Trump suggests that Europeans should come to the US for trade talks. Trump says we will have more friendly tariffs, whatever that means. Trump says that Russia is wiping out Ukraine's electric infrastructure. And Trump says that trade is great for settling wars. Mexican President Sheinbaum says that Mexico also has a plan for tariffs. Mexico's President Sheinbaum says we have done our part in the fight against fentanyl. The US has to do its part. EU's trade chief Sefcovic says, I believe there is still potential to continue U.S. trade negotiations. And Brazil to ask the U.S. for a tariff reduction to 30%. EU's trade chief says it was clear from EU ministers that they would need to go for rebalancing measures if U.S. talks fail. Now, Bank of America today raised their S&P 500 year-end target from 5,600 to 6,300, which is only about a 0.5% upside from current levels. And I do believe a chase is really going to start as a lot of the trade deal situation gets over with by the end of this year. As we realize we don't have an inflation problem, the Fed begins the process of cutting rates, and hopefully by the end of this year, the economy is doing okay. The big beautiful bill is very stimulative with the deficits. There's those tax policies like no tax on tips, no tax on overtime, up to $25,000 for the tips part, $14,500 for overtime, that should help to boost the consumer, get them on maybe a little bit better footing, spur some spending in the economy. Mix all of that together with continued AI investment, continued AI application, and companies excelling with AI from a profitability perspective, from a productivity perspective, should really funnel a lot of money into this market. It should funnel a lot of money into AI stocks, right? And I don't think it's just the high-flying AI stocks, but I think it's these smaller companies as well that will benefit a lot. Again, the trading community, linked down below in the description of this video, is taking full advantage of that. Now, here on the day today, the percent of stocks trading above their 50-day moving average coming in at 70.15%, which is down from about 76% you were at just a week ago. So you've fallen a little bit, but still looks pretty good. The CNN Fear and Greed Index today is coming in at 77. You are in extreme greed, but just barely by about 2 points. Market momentum is greed, stock price strength, extreme greed, stock price breadth, extreme greed, put and call options, extreme greed, market volatility is neutral, safe haven demand, extreme greed, and junk bond demand in extreme greed. Now, the AI Investor Sentiment Survey from last Thursday showed bullish investors at 41.4%, neutral investors at 23.0%, and bearish investors at 35.6%. So there's still a lot of bears out there, but people are slowly starting to turn a little bit more bullish, which, I mean, is a good thing to see. But I think really, there's a lot of bears. Even Tom Lee said recently that there's more bears now from an institutional perspective than there was in 2023. And I think that's just because there's a lot going on right now, and there is a lot of risk. Like if you believe Trump is actually willing to implement 100% tariffs on China, there is a depression risk. A lot of Wall Street believes that could possibly happen. I don't think that Trump would do that. I think, again, he doesn't want his legacy to be one of massive depression. And I think Trump realizes, like, hey, the economy would not just get by with a trade embargo on China. Like, a lot of Wall Street doesn't understand this. Thus, they're going to keep chasing as we knock out risk catalyst. They're going to get more heavily allocated to stocks. And that is part of the bull thesis by the end of this year as well. So let me know your thoughts on all of this down below in the comment section. Hit that like button and subscribe to the channel if you have not done so already. Come check out, as I said before, the link down below in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.